Hello and welcome to Crypto Weeklies. In this video, we analyze the crypto composite risk model as updated as today, the Pi day, March 14th, 2026. Right now, major cryptocurrencies, again, this is the composite risk model. The composite risk is calculated between 0 and 1. This is available on my website, cryptoweeklies.com, link on the bottom of your screen. It's under this composite risk analysis over here. If you want the full report, you can click this over here, and this opens up a new page where the accumulation zones are for these cryptos are when the composite risk is less than 0.3, neutral is between 0.3 and 7, and anything above 0.7 is high risk. Right now, Bitcoin is out of the accumulation zone. Now the price of Bitcoin has risen quite a bit now from that $60,000 or $62,000 level to now at 70,600. The composite risk has gone to the extremes of the extreme end of the accumulation zone, and let's say if it stabilizes over there or comes back down, there is a likely scenario for Bitcoin to rally to that yellow line over here in the remainder of March, let's say the next 2 weeks. If that happens, then looking at the 2022 bear market, something similar happened over here from that May drop till that early June rally, and then subsequent bigger drop to this potentially the white line over here at around $50,000 to $53,000. That could be in cards in April or May of 2026. Coming back to the overall composite risk, there are some cryptos which are right now offering a better accumulation zone, ideally where the risk is less than 0.2. And one of those cryptos is Doge, but it's a meme coin, and the other one being Cardano and its token ADA. We have analyzed ADA at great length, and again DOT also having that overall composite risk at this stage of the bear market less than 0.2. So let's try to have a deeper dive into Cardano and its token ADA. ADA right now is trading at around 26 cents. It's coming at a range lows. This lows ADA has respected since the drop in 2022 bear market. So price of ADA right now is very close to the 2022 bear market lows. If the price finds some sort of support at that price action between 20 to 23 cents, that could be a major catalyst for the bear market bottoms for this year, provided everything else stays equal. Looking at the longer term moving average based analysis for ADA, now the 200 week simple moving average for ADA is at around 50 cents. Price action is roughly speaking 50% lower than the 200 week simple moving average. Whenever this blue line which turns white, whenever the price is lower than the 200 week, the price is also lower than the 300 week simple moving average, which is at around 67 cents. So those are the longer term moving average price based analysis for ADA, which says that ADA again per the technical levels also is kind of in an accumulation territory. Looking at the momentum candles, what could be the worst case for ADA as it approaches some of the range lows, this ascending channel, the yellow ascending channel? What I could see ADA doing in 2026 is either visiting the middle part of this channel, which is at around right now, if there is a drop to that point is at around 19 cents, but later out into the year it's closer to that 20 to 21 cents. The range lows for this channel drawn from the 2018 bear market, which in 2022 this channel was hit, but only the upper part. This time around the lower part could come into play if there is further bearishness ahead of us. Then that channel, the end of the channel is somewhere closer to that 10 cents level. That's the worst case scenario for ADA. Looking at this bear market and comparing it with the last time around, ADA had a monumental rise in that lasted to about September 2021, and then price action was essentially down only from October 2021 till January 2023. So the entirety of 2022 and 2 months in 2021 price action stayed bearish, whereas in the bull market that essentially started when the bear market got over in October 2023 for ADA, there was a staggered approach where again 1 month downturn over here was replaced by several months of downturn in the middle of the bull rally from April 2024 till October 2024. Then again another staggered approach from November rally to about January 2025 bullishness. Then again 3-4 months of bearish activity, and then again couple of months bullish, and now potentially in the bottoming phase like it is like it was in September October 2023. So that's the analysis for ADA using technical levels. Trying to do a deeper dive using the individual models. The logarithmic regression based fair value for ADA is at around 57 cents. This is again a mathematically derived regression based fair value using its own price history, looking at a line to cut the price action into two halves. The top part is where the price action is overvalued, undervalued is bottom, and trying to go even lower than one standard deviation residual applied to the fair value, accounting for diminished volatility or the decay function, where the thickness of the distance diminishes as the asset gets more and more adopted, accounting for the diminished volatilities. Right now the price action is still below the green line over here, which is again one of the key points of making this video, as the price action is below 31 cents. ADA is in an accumulation phase using using the technical analysis, the longer term 200 week, 300 week indicators, the monthly candles looking at the range, this range ADA entering this yellow range, accumulation range or the bottoming range. Also the regression based analysis pointing to, again not financial advice, pointing to an area where the price is lower than the one standard deviation residual band. The worst case scenario for ADA is this dark green line. Right now is at around 17 cents, but you can see this is an increasing function. So this line could come into play as ADA's price action comes close to that 20 cents level. It did come really close to that level in February 2026, but again the price found some support and started rallying back to this light green line over here, the one standard deviation residual. This is the dark green line, is the two standard deviation lower band. The opposite of the fair value to the downside is the fair overvaluation to the upside. Last time around, the yellow line did come into the play during the euphoria phases of the market cycle. That level for ADA is currently at around $1.04. That is roughly speaking, from the current price, that's roughly speaking a 4x. If that were to materialize time, maybe in later 2027 or early 2028, that would be a 4x from the current price to the top of the channel, assuming that the yellow line does not grow with time. Looking at ADA's time weighted average price based model, which is again one of the more important models in the bear market accumulation. The white line over here is the time weighted average price, which is essentially not looking at just a simple moving average or where the price is with respect to the simple moving averages. It's analyzing where the price of ADA has spent its entire life and what is the gravity of time based interpretation. Is the price at this point essentially helping you to beat the clock by entering at a level where the market has historically spent very less time? The answer is yes. The time weighted average price is 50 cents. That means at 50 cents, the price of ADA is at a natural state where it is not overhyped or ignored. That's a baseline value created over years of trading spent from 2017 to 2025 almost, and now we are in 2026, almost 8 to 9 years worth of data pointing to and this is at a daily level. So one day is counted as one interval over here. So 8 into 365 days, roughly speaking, that amount of data points pointing to this time weighted average price for ADA. And you can see, historically speaking, whenever the price has been below the white line, accumulating at that point has not been the worst idea. That doesn't mean that the price does not drop from when the price goes lower than the time weighted average price, as evident from the last bear market. Price at the bottom was negative 50% or almost 50% away from the time weighted average price. This time around, the deviation already went to 51% in early February 2025 drop. So that also signals that again there is a potential for ADA at this point from an accumulation perspective. Looking at other models such as the 20-week simple moving average price based risk, it has not gone down to the range lows, but at the bottom it's usually in this blue color between 0.1 and 0.2 risk, and not at the lowest risk level that usually occurs at the initial drop phases. You can see over here, this drop is usually the initial this risk level is during the initial drops or from a range high. That's because from proportionally speaking, a drop from the all-time high to, let's say, the initial drop coming couple of months out into the bear market, that usually in proportion is the highest as the drop is steeper. But at the bottom, usually you find that the risk level is in this blue shaded region, or blue risk level between 0.1 and 0.2. ADA is in this risk regimen at this point. That means there is a chance that price is very close to the bottom. All in all, if there is a bear case for ADA for the next couple of months, the worst case scenario for ADA, if let's say till May, the price action is bearish, is between 13 cents and 17 cents. And the upside, again, if there is a recovery or a counter trend rally of couple of months, then 40 cents could come into play, which is about from 15-16 cents from the current price. And in terms of proportion, it would be roughly speaking 60% higher than the current price. All in all, if we were to estimate a bear market bottom for ADA and then try to come up with a narrative where what could be a theoretical bull case in the next bull run, we will conclude on that one. The base bear case is already behind us. That was the base case scenario, ADA dropping to 50 cents. That has already transpired. That means one indicator saying that, again, price action has entered the panic zone. The panic bottom for ADA is at around 20 cents, and the recession bottom, or a worst case scenario 3 standard deviation bottom for ADA is 16 cents. That is roughly 40% of the current price. All in all, if we were to conclude on a bullish note, if let's say 2026 concludes really well, and then there is a altcoin season in 2028-2029 bull market, the base peak for ADA is roughly speaking $2.60, which is from the current price at around 10x. For context, ADA did have a rally to $3 in August of 2021, and with increasing series of higher highs that ADA has put since 2023 essentially began. If there is a higher low in 2026, a rally to $2.50 would be from the Fibonacci levels would be at rally to 0.786. It would be still a lower high from the 2021 bull market. The levels below that is the $2 level, which is the 0.618 on the Fibonacci level. So that could come into play in 2027, 2028, or potentially even in early 2029 if there is an extension of the altcoin season. So that's roughly 8 to 10x of the current price. With that, I would like to conclude saying, again, there is no such thing as a sure thing. These assets are highly risky, but if they manage to stay relevant, if ADA stays within the top 10 to 20 cryptos by market cap, and if the asset class grows and ADA's slice of the pie remains more or less the constant, good things could be on the horizon. But one has to contend with the bear market that one faces, and these one of the 4 years in the 4-year market cycle theory for the crypto asset class. So hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day.